Here are the market participants. Low volume, low market participation. You are looking at the wrong chart. We want to see another perspective that tells you the full story. This is today's chart, so it's updated. As you can see, we have selling on the leading indexes, here and here. Now we want to see more confirmation to understand if today's price action is an uptrust or a sign of strength that is just backing up. In both cases, we have to wait. The last supply bar has increased volume, but we are currently above the resistance and we want to see more confirmation. I will write a full analysis in the crypto report tomorrow, but today I would like to spend more time on the post-analysis of the last week price action, because I want to show the process. So this is the intraday chart of the major crypto indexes that I published in the last crypto report. Little by little, I am introducing you to one of the major topics of today, the comparative analysis. When you watch the weekly market discussion, Bruce and Roman opened the session with the analysis of the main US indexes, Nasdaq, S&P, Dow, and Russell. Here, instead of the Nasdaq, S&P, Dow, and Russell, we have Bitcoin and three major crypto indexes: large caps, mid caps, and small caps. These indexes are a new product launched by FTX, a great derivative platform that's totally devoted to crypto. They have been created just a few months ago, but they are very popular. And these crypto futures are still not available in the US market for the average retail investor. But please keep in mind that crypto funds are very smart, flexible, light institutions. They operate in the digital space. They can relocate their activities to other countries in the blink of an eye, and that's fully legal. There are really no boundaries in this financial space, and until the day that we see a systematic global regulation of the crypto ecosystem, crypto funds will just benefit of the current fragmented regulatory framework. They can just choose the country offering better business conditions. I think that new regulations for the whole ecosystem will come at some point. But who knows, maybe they will come after the current price cycle. In the meanwhile, we want to be aware of the characteristics of the current environment and participate into this market. And even when a particular financial instrument is not available in your country, the offering of crypto instruments is so vast that there is always a way to extract gains from this market. And we will talk about this in the third session. So the great news about these crypto futures is that they are traded every day by crypto funds. You can find online the composition of these baskets of cryptocurrencies. Here's a description of the mid-cap crypto futures. As you can see, it's just a basket of cryptos with similar characteristics. The tickers on TradingView for these instruments are Alt-Perp for big names, Mid-Perp for mid caps, and Shit-Perp for the low caps. And personally, I never thought I'd be trading a future contract called Shitcoin Perpetual Contract. It seems to have come straight from a play by Samuel Beckett or Alfred Jarry. And the crazy thing is that not just retail traders use these contracts, but also big players in the crypto industry. Crypto is a very young financial ecosystem, and very often people work in the crypto funds at 30, 35 years old. They get a job at Deutsche Bank, Goldman Sachs, and at some point of their job career, they discover a new financial ecosystem, crypto. Since there is always some kind of resistance on the part of experienced analysts, because this is a very high-tech sector. The crypto industry offers higher wages than their competitors in traditional financial world to attract young specialists. The universe of professionals operating the crypto is almost fully populated by millennials, and millennials create new financial products, services, and even the name they choose reflects their habits, the way they communicate in the internet age. Now, just try to explain to a friend, I'm trading the shitcoin index. I'm sure that you will call an ambulance. And this phenomenon accentuates the generational gap in the crypto industry. I personally think that this generational gap is a shame because I strongly believe in the power of the transmission of knowledge between people of different generations. Wyckoff are just a great example of a century of dialogue between traders of totally different eras. A young traders could learn so much from the history of the market, while experienced investors could just test their models with these high momentum instruments. Also, think of the endless debate between fundamental analysts and technical analysts. 90% of fundamental analysts are terrified by the crypto sector. Fundamental analysts can't use their usual metrics to study crypto companies because many of them are just in the bootstrapping phase. Since this environment is global and not regulated, crypto business can attract capitals when they are still in the bootstrapping phase. In many instances, there's no product ready for the masses. The credibility of an altcoin is in a sense the credibility itself of world top coders involved in these projects that truly want to be winners in this competitive space. Several coders working in this space are top professionals that already created software that you are probably using this moment. But when you are still in the bootstrapping phase, it's very difficult to predict if a product will be successful in the next 10 years or not. Generally, the blockchain specialists that work in the industry judge a new product simply looking at the credibility and the skills of the people involved in the project. How can you can judge the value of something that still does not produce relevant economic data? But even without data, crypto markets show the same patterns that we see on the stock market. They are almost identical. A fundamental analyst facing this dilemma will be forced to question his own authority. So technical analysts and Wyckoffs have a tremendous edge in this sector. So this is the SHITPERP, the low cap crypto index. It's basically the group of the most speculative assets within the crypto market, which is by itself one of the most speculative asset class ever seen. And monitoring the most speculative assets give you some hint about the general sentiment of the market. So this is our secret, guys. We look at the S&P, but we always have page opened with the shitcoin index. And look also what kind of structure we usually can observe in these indexes. I covered this index many times in my crypto report. Classical structure, accumulation, major sign of strength, and this is a change of behavior in the market. And basically from this day, you have seen a trading range that we explore now. And we still have to understand if this is distribution or accumulation. We want to always have some kind of confirmation. Now let's come back to the chart that I published on Saturday. The low cap index here shows an upsloping structure compared to Bitcoin, and it's already breaking to the upside. We can find a very similar story in the mid-perp index. Bitcoin and the altcoin index are the worst performer. What does it mean? What's the hidden force sustaining the price of low caps and mid caps here? That's demand. In these two indexes, there is more institutional presence in this moment, at the moment where I publish the chart, compared to Bitcoin. Also look at this. The low cap index is clearing the resistance. This is a very interesting structural point. Do you remember what we said in our first session 1 week ago? You always want to pick the asset that is ready to jump out of the range. You always want to catch the emergence of the uptrend. You are always looking for that magic moment where price is sustained by demand and there is no supply on the resistance. And this is the reason why at Wyckoff Analytics we spend a lot of time studying phases. Phase A, phase B, phase C, phase D. It's not just a theoretical idea. There's a practical reason, and you can immediately see the benefit of this concept. In each phase of a consolidation, price shows a specific behavior. If you have two assets, one in phase B and the other in phase D, basically we are saying that the first asset has still to fully absorb the supply present in the market, while the second is ready to fly. These dynamics are the same in the stock market and the crypto market. So we usually when we work with stock, half of our work is actually in the selection process. The selection process also helps you to reduce the cost of the trading business. In your trading career, you'll make a lot of mistakes, but if your selection is good, even when the market is punishing your trade, your losses will be small, and your good trades will outperform the market. And this is very important in the crypto space because low liquidity tends to create sudden shakeout actions. So especially if you are using leverage, your selection has to be extremely good. And you can't really imagine how many times I made analytical mistakes, but a good selection process has protected my account. Let me see some question. The altcoin index is generally large cap. By the way, on FTX, you can find the composition of that index. So you can look for all the assets included, the quantities, and it's very, very useful. Great. The main principle is the capitalization, but in general, you can have also indexes created by thematic buying. Let's say that there is a kind of thematical buying, kind of fashion in the crypto industry in this month. And you can see an index created just as a sum of a basket of cryptocurrency with a specific theme. Now let's explore the selection process in a very detailed way. Let's analyze these two indexes, the shit perp on the top and the mid perp. Look at the green spots. Let's say that you want to open a position to the long side on the areas highlighted in yellow, in green, sorry. We want to select the asset with stronger rallies and shallow reactions. Stronger rallies suggest more buying activity. Shallow reactions shows inability to go down, basically, are a sign of less selling the market. So according to your opinion, which asset is performing better? Write down the shitcoin index or mid-cap index. If you have attended the Wyckoff trading course, Roman have taught you how to compare two assets. Let's quickly recap the method. First, we identify the significant highs and lows. So we want to mark these points.